Hey everyone, welcome to a new video on my YouTube channel, and today in this video we are going to take a look at how I scan my stocks for trading futures. So you might have seen that I have recently started taking a couple of future trades, and I am going to show you a rule-based approach on how I filter out my stocks, how I take an entry, how I exit my stock. First and foremost, let me tell you why I actually trade in futures. The simple reason is leverage. With futures, you usually end up getting close to around 4 to 5x leverage, which means if you actually make 1% return on your stock, you will actually end up making almost around 4 to 5% returns on your future. This also means if your stock is moving up by 20%, you're almost going to double your initial capital. So that way, the potential for higher returns is much higher when you start trading with futures compared to trading with equities. But this also has a big disadvantage, and that is with futures, the leverage is going to help you earn a lot, but it is also going to make you lose a lot. So in case of losing 5%, you might end up losing 20 to 25% of your capital. And similarly, in cases of where you would have lost 10% of your capital, you will actually end up losing close to around 50% of your capital. And this is just because of the leverage concept. So that's the reason future usually people call it a double-edged sword. So if you know when to trade, if you know how to trade, and if you know when to cut, you are going to survive in the market for a longer time. And in case if you cannot manage your trades well and you get involved emotionally, so then you're actually going to have a pretty bad time trading futures. So that's the reason what I would suggest starting off is, in case if you're not able to manage your trades well, in case if you're not able to control your fear and greed well, I would suggest to start off by trading equities and then maybe slowly start trading one or two lots of futures. So first, starting with equities would be a much better approach than starting with futures directly. So whether you do momentum trading, whether you do future trading, so the framework what I'm going to suggest today is something which I use for both. So you can take a look at it and also start scanning the stocks today. So the very first thing what we discussed is this is going to be a rule-based approach. That means we are going to have rule number 1, 2, 3, and we are going to start scanning the stock. Then we are also going to see where we can keep our stop loss and where we can take our target. So the very first rule in our rule-based approach is to look for sectors which are performing relatively better. So now if you take the market at any point in time, there'll be certain sectors which will be doing better than the others. So now let me give you an example. Let's say you started trading somewhere in the month of July or August 2022, so almost 1 year prior, right? So now let's say you also start scanning the stocks. So this is the Nifty PSU Bank Index. And you can clearly see that in this index, there is no clear breakout in the month of July or August 2022, almost a year back, and the entire index is consolidating. So most likely, even if one or two public sector banks start to break out, it is good that we actually avoid this and look for something where the entire sector is giving a breakout. So let's go to the pharma sector. And again in the month of April, May or June, you see that there is no clear breakout in the pharma sector. So next we'll take a look at the IT sector. So you can see that after the fantastic rally post-COVID, so the entire IT sector is again consolidating and there is no clear breakout. So when you're taking a look at it, you can see that the entire index as such is consolidating. That means mostly you're not going to find any good trades in any particular stock because overall the sector is not moving. So even though individual stocks are performing, it will be generally slow. You're not going to see a huge rally in the stocks. So in that case, what exactly can we look at? So if at the same time you see CNX Auto or Nifty Auto Index, you can see that the auto index had given a fantastic breakout around August or September 2022. So here the entire sector ended up giving a breakout. That means most likely you are going to see the entire stocks in this sector rallying. So when you take auto, the auto index is quite huge. It comprises of stocks like Tata Motors, Maruti, Mahindra and Mahindra, TVS Motors and much more, right? So now you have a huge range of stocks which you can start scanning and see amongst these stocks which is much better. Whether Maruti has relative strength, Tata Motors has relative strength or Mahindra has relative strength. So the first and the foremost scan what you have to do is take a look at which sector is potentially giving a breakout and which sector is looking strong. So whenever we try to find any future trade, we'll most likely be choosing from the sector which is relatively looking stronger than any other sector. Or in this case, let us say you were trading in August 2022, you could have gone for something like the auto sector. So now, after narrowing down which sector we are going to focus, so we found that auto sector has relatively given a better breakout. Let's take a list of stocks which are actually in the auto sector. So you can see that you get a total list of maybe around 15-20 stocks starting from Ashok Leyland all the way to TVS Motors. In this also, you can very easily remove 5 to 8 stocks because they do not fall under the F&O category. So maybe you can see something like Tube Investments, Sona, BWL, and even for example MRF, because MRF there is no much liquidity. So you can start removing stocks which do not actually come under F&O or where the liquidity is not very high. So that means we'll be left with handful of stocks which we have to start scanning. So now we'll take a look at Ashok Leyland and see how the stock was performing during 2022. And you can see around the time of August, September, the stock had not really given a breakout. Even though the sector was strong, sector had given a fresh all-time high breakout, the stock was not really doing well. So we can easily avoid the stock. So that way, let's come to Bajaj Auto around the same time. When you take a look at Bajaj Auto, so even here you can see that the stock had actually given a fresh all-time high breakout and it was consolidating. So this can be a potential stock which you can look at, because when the index has given a fresh breakout, even this stock around the same time has given a fresh breakout, and you could have potentially taken your entry maybe sometime during March or April 2023, but this could definitely be in your watch list. So we have removed Ashok Leyland, we have added Bajaj Auto onto our watch list. So next we are also going to look at Balkrishna Industry. So this stock, again you can see around maybe August, September 2022, the stock had given a very good all-time high breakout. It had rallied and it was consolidating. So we do not have any entry as of now, but it can definitely be added to the watch list till we get a fresh breakout. So now we have added Bajaj and Balakrishna to our watch list and removed Ashok Leyland. Now if we take a look at Bharat Forge. So Bharat Forge around the time of August was just giving a breakout and the stock was looking strong. So we can again add it to the watch list. And right now we have only avoided adding Ashok Leyland. And when you start doing that, so let me just give you the result. So instead of showing you each and every scan. So when you actually start looking for stocks, so if you actually take a look at Mahindra, here you have a fantastic entry. So Mahindra has just broken out of all-time high and the stock is also looking very strong. Maybe during the time of July and August of 2022, Mahindra was a stock which was worth entering. So the stock right then was trading around 1150 and this was the stock which was actually worth entering. So now let me also show you one more stock, that was TVS Motors. TVS Motors had given a fresh all-time high breakout, and this was a stock which was really good to enter at that particular point in time. So now we have three kinds of stocks. So stocks like Ashok Leyland, which was not really doing well, even though the entire index had given a fresh breakout. So you can see stocks even like Maruti during the same time. So during July, August of 2022, the stock was not near all-time high. So even though the index was actually going above all-time high, the stock was still trading well below all-time high. So now we have three kinds of stock. So first one is stocks like Maruti and Ashok Leyland, so which are way off all-time high, even though the entire index is all-time high. So we remove such stocks. So we also removed stocks which were not in F&O and stocks which didn't have liquidity. And the second kind of stocks are which had given an all-time high, where there was no momentum, something like Bajaj Auto or Balakrishna Industries. So these are the stocks which we can actually add it to the watch list and keep. We don't have any entry right now. So they have given a breakout, but there is no follow-up momentum. So these are the stocks in our watch list. And finally, we have stocks like TVS Motors and Mahindra, which had given a fresh all-time high breakout. The stocks were looking strong, and these were the stocks which were worth entering at that point in time. So now you can see that from a broad sector, so you didn't know what exactly to pick out of 7,000 stocks in Nifty. Now you can easily narrow it down to handful of stocks just in matter of 20 to 30 minutes. So if you just go through this entire list, so first you started off by narrowing the sector, so which sector you are going to focus on. Then you just have to go through the list and you will find hardly around 5 to 10 stocks which are worth adding to the watch list, and maybe hardly around 3 to 4 stocks which are worth taking an entry. So this is how you can start narrowing down your entire trade. So now once you have taken an entry or decided which stock to enter, let's say we take an entry in Mahindra maybe somewhere around May or June of 2022. So that would be somewhere around this particular time. So whenever I trade, I usually follow the weekly chart. So maybe let's say somewhere around this time you would have taken an entry. So since the stock has just come out of all-time high breakout and also of a good consolidation for almost around 2 years. So you can take a look at this. So 2 years the stock had consolidated and finally it broke out. So if I'm entering maybe somewhere around 1000, so my stop loss would definitely be to see in case if the stock is actually coming back to this range. So this is a fantastic range which the stock had formed, and finally it is breaking out of this range. So in case if the stock is coming back to this range, I would be taking my exit. So initially after my entry, you can see even if I had entered maybe somewhere around 1030 or 1040, my stop loss would be somewhere around 5%. So almost around 50 points. So this would be my initial stop loss. I would wait for a weekly close and I would enter Mahindra and Mahindra maybe somewhere around 1040 or 1050. So now I am not going to keep any target. Rather, we will start trailing the stop loss till we get a good exit. So after that, Mahindra started to see a fantastic rally, and you can see that Mahindra finally made a initial top. Then Mahindra slowly started to come down. Here it took support, later came back up. Again came down, took support, again came back up. And again came down. So you can see that at this point, the stock had already taken multiple supports at this point in time. So we saw a fantastic rally. We saw a first pullback. So generally or very unlikely you are going to see such a rally and suddenly this entire rally comes down in one way. So we are going to see a pullback and then we are either going to see the continuation of the rally or the market will again start coming down. Again there will be a pullback, and at this point the market can either go up or again start coming down. So very unlikely we are going to see that the market goes up like this and comes down the same way, and this happens in very rare cases, right? So here the stock actually went up, made a high, swing high, and right over here the stock came down. At this point it again made a swing low and went up higher, right? So at this point you can simply trail your stop loss all the way from something like 1080 to something like 1200. So you can see that you have already captured close to around 20%, right? So you can simply trail it to a weekly close below 1200, right? So this is a fantastic capture of 20% and you're still holding your stock. The stock again tends to go higher, comes down, takes support right over here, and again tries to make a fresh breakout. So this breakout unfortunately fails, comes down, but now the stock doesn't even take support around 1200 but gives a closing below 1200. So you might have held the stock for almost around 2 to 3 months where the stock gave absolutely no return. So by this time the stock also had started to lose momentum, and finally maybe somewhere around February or March you get exit in Mahindra and Mahindra, making a good 20% on your capital. So you would have most likely taken your exit maybe somewhere around 1180, making it close to around 15 to 18% return on your capital, and this way you could have gotten out of the trade. It is secondary that the stock actually ended up rallying later on, so you would have missed this entire rally, but you would have also got the exit. So similarly, when we see TVS Motors, we would have seen something similar. So after the initial breakout, so this was the first swing low, but in TVS Motors, the advantage is you never really got the exit. So you can see the stock went up. So this was the first swing low. Again, the stock went up, came down, took support right over here. And again, after taking multiple supports, the stock made a fantastic rally. So in this case, you would have almost got closer to around 100% return on your capital. So if you had just put in the stock, maybe you would have waited closer to around 1 to 1.5 years, but it is a fantastic return because the stock is in momentum. So now you might ask me, did you actually trade in these stocks? So the answer to that is no. Why? Because I started following this approach quite recently. So maybe from the past 4 to 5 months, I am following this approach of entering futures. Previous to this, I was looking at companies individually. So you might have known my IDFC Bank trade. That was actually scanned with an idea of momentum, but I really didn't go sector wise. Rather, I looked at individual company wise. So this can be one single way where you can start scanning your stocks based on the sector wise, then go down to individual stocks which are performing the best. So this way we learned three simple approaches. First, you take a look at the sector which is performing well. Then you go down to individual stocks and then see how they can be categorized, whether they can be totally removed from your watch list, or they can be added into your watch list, or they can actually be entered. So we saw in auto sector how exactly we could have differentiated the entries or differentiated the stocks. So we got good entry in TVS Motors and Mahindra. So then the third approach is you are going to ride the momentum. So whenever the stock makes a swing low, so you are going to trail your stop loss there, and whenever the swing low starts to break, you're simply going to come out of the trade. So this is a simple approach which you can start following. So initially you can start following this with equities, and slowly and steadily you can maybe try it out with 1 or 2 lots of futures. Futures is definitely going to be risky because you are going to do this with leverage. So this is a simple approach which I have started following recently in my momentum trading, and I hope this simple 3-point rule is actually going to be useful for you, and you can start scanning stocks which are giving a breakout and ride the rally. So with this, we also come to the end of this video, a short video on how I scan my momentum stocks, how I scan my future trades and take an entry. In case if this video was valuable and useful, make sure you hit the like button, share this video and subscribe to my channel. Thank you so much for joining, guys, and see you soon in the next video.